Hi, I'm Suzanne Collins-Ford. I'm a licensed investment advisor, and I've been helping people to make money in the stock market for 33 years. Today I'm going to help you. This podcast will help you select the right stocks for your portfolio. In fact, I'm going to describe for you the stocks that are in my portfolio right now. If you've seen my videos on YouTube, how to buy stocks and how to select a stock for long-term investing, this podcast will supplement those videos. Or you can listen to it all by itself. I'm going to tell you what kind of stocks are likely to make you money right now and how to learn to spot profitable trends. If we could have a glimpse of what life was like 10 years from now, we'd have a good idea of where to invest, right? So we're going to look at the future and we're going to pay attention to the trends. Not only for whether to buy stocks right now at all, but which areas or industries should we focus on and which companies will be the most likely to succeed. And importantly, which companies will have the biggest challenges. Remember, there are thousands of stocks to choose from. We need to learn to avoid the losers as well as pick winners. Right now in mid-2017, there are huge changes taking place. Changes mean opportunity. Baby boomers are retiring. Millennials, the largest group in our population since baby boomers, they think about things differently than we do. And also technology is changing the future. So how we spend our money, our homes, our transportation, and our work will be drastically different in the future, and we're going to talk about those. When I was a young person, I dreamt of having a huge wardrobe. To me, the ultimate in wealth was being able to walk into a store and buy any outfit I like. Well, last week I walked into my local department store and realized my dream had come true. I could buy anything in there. Clothing is very cheap right now, you know. But it wasn't nearly as exciting as I thought it would be. Millennials are certainly not excited about it. Have you noticed that they don't buy a lot of clothes? Nowadays, jeans and a t-shirt are all you need. In fact, in some places, uniforms are becoming preferable. People used to love to get dressed up. Right now, the stores are so full, it feels like they're giving away this stuff. The question is, will we only wear jeans and t-shirts forever? No. One thing we know about consumers is that they change their minds and that people love new things. Another big change is our shopping habits. The average American is now shopping online. We all know this trend will continue. We all think we should buy Amazon, right? They sell everything, they deliver next day, they have great prices, you can access them from anywhere. But if you've watched my how to buy stock videos, you know we should never buy an overpriced stock. Many analysts think the price of this e-retailer is way too high. So what should we do? Well, all of this disruption offers buying opportunities. We are not looking for the top company. We want the top contender. We want the depressed, overlooked competitor who's going in the right direction, doing well, and will probably do better. Here's a key. There are contenders who are gaining ground fast, have huge websites, good prices, free delivery, and huge distribution networks. I currently have one in the Bowood Partners portfolio, and by every valuation, this stock is much cheaper and they pay a huge dividend. So how do you know what the valuation should be? Watch my video, how to select a stock for long-term investing. Well, the other big disruption in retail is shopping centers. Malls are closing everywhere and the remaining malls are changing. Changes like this often mean lots of casualties. We've seen casualties. Sears and Kmart have bitten the dust. And with so many of us buying online, there are just too many major retailers now. But really, will everyone just stop shopping outside the home? Well, of course not. Will there be fewer stores? Definitely. But which ones will succeed? Which ones will prevail? I think the stores with the most interesting and exciting approach will win. Innovation and creativity will be the key ingredients as they are in every business. Those companies willing and able to make changes will still be in the running. Malls are already changing. I think the malls of the future will have lots of ways to look at and try and demo items. Stores are going to look different, displaying the clothing instead of storing it. You can have your items delivered to your home the same day, free of charge. There'll be entertainment in these new malls to lure you to buy. Expect demonstrations, fashion show, arcades, and other experience-based fun. Malls will be destinations. Question is, where do we invest? It will take a lot of money and some time to make these changes. In my portfolio, we have 2 retail chains right now. These are companies with lots of assets, spare cash to make it through the tough times, lots of innovation, willingness and ability to make big changes, as well as very good online technology. In my view, right now is a good time to buy retail stocks. They're trading at very low prices compared to their historic valuation, and the good ones have lots of cash, assets, and distribution networks. Let's talk about our leisure time. Right now, consumers are spending not to accumulate stuff but on experience. There is not as much interest in collecting art as there is in climbing the Himalayas. In fact, travel is at an all-time high, and the increase is in leisure travel, not business travel. Very important. Have you ever heard the old saying, whoever dies with the most stuff wins? It's changed. Now it's whoever does the most stuff wins. Once again, millennials are changing things. Hotels are not doing as well as we might expect, though. Why? Because people are renting out a room in their home to travelers everywhere. And homeowners worldwide are renting out their entire home for a family vacation. Of course, this is much more affordable than a week at a resort. In some cases, timeshares as well. This is an important trend. Not only are we seeing additional money come into the households, which we need, but we're also getting great deals for the traveler. However, there's too many hotel chains. Rental car companies are taking a hit as well from Uber and other self-drivers. Again, money coming into the household, but not into Hertz Corp. Eating is changing as well. It's a tough competition for a restaurant, so they're hustling to make it better. We can find a table online while driving around in our car. Waiters are becoming a thing of the past, and food is being delivered via conveyor belts. We order and pay with a tabletop computer and play games while we wait for our food. We can have our food delivered from most restaurants if we like. We can prepare our own food with kits delivered to the door. We're buying our groceries online and getting them delivered within an hour, delivered by a drone. And restaurants and grocery stores are slow, and they will be a very tough business for a while. Stay away. Obviously, this is going to impact restaurants and grocery stores, and all of us should benefit from less expensive, better quality food. You may notice that it is new companies innovating, small business owners who are creating new ways to eat. The good news is that this is also good for the economy. Not only is more money coming into the household, but most job creation does come from small business. And small business is still the best way to become a millionaire. We have more small business millionaires in this country than anywhere in the world. And it is only good for us if every country had strong small business growth. So again, what do we buy? If restaurants and hotels look like such a tough business, what do? We stay away. If you have seen my How to Buy Stocks videos, you know you only need 11 stocks to properly diversify. If an industry is troubled, don't buy it. Stick with your winners. Pick at least 4 different industries, though. Another option, buy a really good small company mutual fund. Low fees and an experienced manager. I like to look at the top holdings to see if they're in alignment with our thinking. We have a selection in our Bowood Partners portfolio. You might notice I'm not giving you names of companies. I told you about a major e-retailer. We have 2, one in the US, one international. I told you about 2 mall retailers that are poised to make it through the changes and become victors in the new retail. I told you about a small company mutual fund, but it's August of 2017. If you're listening today, my stock picks are good, but in 2 weeks or 2 years, everything will be different. The stocks I'm telling you to buy now could very well be the ones I'm telling you to sell then. Research is key to making money in stocks, and old research is just that. Fresh research is always necessary. What else is changing? our homes. It's nice to have a big home. You can have a separate formal dining area to use with guests. You can have a separate family room to keep your living room from disarray. You can have a home office. You can have a huge backyard to enjoy with your family. But let's talk cost. A big house takes up to $400 a month or more to have cleaned. The huge backyard is another couple $100. And the constant improvements become more costly with each square foot. A big home's useful life is limited as well. The kids turn into teens and want to be out or on the internet. Then they move out and you put in a weight room. The millennials are thinking differently. What about having a smaller place and spend the extra money on getting out of the house? And if you're single and out all the time, why do you need more than a bed and a kitchenette to make coffee? Real estate is changing drastically. Not only are millennials opting for smaller living spaces, but companies and their workers are abandoning their cubicles and their commute for a workstation at home. I was shocked in my last visit to Wall Street. Right now, Manhattan, once the hub of office space, is emptying downtown. Highly paid workers traditionally spend 2 to 6 hours a day being aggravated in traffic. In recent years, they've chosen to work from home. With conference calls, Skype, and computer systems, workers can do all of the same things without sitting in traffic every day. So office space is not needed, and cubicle space is becoming small apartments. A big house, once a sprawling manse converted to several small units. There are also tiny house communities popping up everywhere across the country. Traditional mortgages are harder to get. The banks are under pressure. Non-traditional lenders are getting the business. LendingTree, private lending groups are disrupting the banks. What does this mean for an investor? The traditional real estate developers, like the residential housing builders, are being disrupted. The tiny houses, conversions in Manhattan, redesign of big homes are being done by small business, not big developers. Housing builders focused on large homes are likely to falter. Those building the starter homes are more likely to prevail. Smaller is better, and more technology. Some of the builders are making homes that turn on and off your lights by verbal command and can turn on the heat an hour before you arrive home from work. We have to be very selective in real estate. The only real estate to buy, in my view, is residential family homes. Rental apartment companies have had their run. Those stocks are too high right now. Don't buy the high-end homes. Aim for mid-priced, smaller, more technology. Our portfolio selection is a mid-priced home builder with affordable technology perks located in the growing population areas. Because of telecommuting, commercial business space is on the decline. Technology is disrupting office space. Don't buy commercial real estate. Office space is a no. Companies making home workstations are a yes. Smaller home builders are better than bigger, and conversion companies are the best. Another note for now, don't count on banks making bank from their mortgage business. There are fewer mortgages, people are saving rather than spending right now, and interest rates are low. Transportation. I believe Americans love their trucks. Living in Arizona, I observe that there is little concern for gas mileage. There is little concern for small parking spots. The huge truck, jacked up with extra length and width, is the rage here. This is a passion purchase. But sooner or later, economics and the environment will catch up to us, just as it has in Europe. In Europe, several cities have just passed new laws banning gasoline-powered vehicles from their roads. Eventually, we will all need to drive electric cars. That is coming. The big car companies are building the cars of the future as we speak, and they will probably sell them overseas before we even see them. You see, the big automakers in the U.S. make a much bigger profit on huge sports utility vehicle than on electric. And for now, they're selling as many as they can. But the forces of the environment will overtake us, and we will have to buy electric cars. The trend is not only electric, but also self-driving. The first autonomous cars are already on the street, and soon they'll be open for ride sharing. Right now, in some cities, A roaming driverless Uber can pick you up at your beck and call. Perhaps an everyday ride to a work site, which you share with a couple of nearby coworkers. A few brave are riding in their first cars with no driver, and soon we'll all be able to buy one. And then there will be a variety to choose from. They will have all kinds of features, from a TV and computer on board to a dressing table and mirror for grooming on the way to work. Of course, in any model, you can drink your coffee and read your paper and let the computer do the driving. And of course, there will also be no wrong-way drivers, unauthorized drivers, and people using a car as a deadly weapon. When we start to imagine this, difficulties arrive, don't they? How do we know what the other car with the driver is doing? What if we want to switch to driver mode? Understand, the whole driving system is going to change. There will be designated roads and lanes for these cars, and in the end, gasoline vehicles will most likely have a separate lane with trucks as well. There may be express lanes for vehicles going long distances. Speed will be regulated. I imagine at first people will want to hold on to their old traditional vehicle for a while. We will probably need them for some journeys, but the new system will be much cheaper for the consumer, much more efficient, environmentally friendly, and safer. There will be many winners in this race. Everyone is involved, from the database that has all the maps and communication system, the software that runs the system, the chips that connect all the cars themselves. Who is making the cars then? Will it be hybrid or electric? Who is ahead of the game? Well, the U.S. automakers for sure. One major maker already has 27 models of self-driving electric hybrid cars. But keep in mind, when the U.S. auto industry was born in the early 1900s, over 1,000 companies listed on the stock exchange were in the automaking business. 100 years later, there are 3. Our portfolio has one of the major U.S. car makers, the one with the 27 new models. Another change will be high-speed trains and other mass transportation. The truth is that if the world had as many drivers as we do in the U.S. compared to our population, we would never have enough road space. Even with 5% of the world's population, we're running out of road space. And with a growing economy, more people are moving. For business, for leisure, for fun, for family, people are moving more. And the only solution we have right now in this country is taking people 30,000 feet in the air and down again, which we know is very dangerous and will get more so. We must build more options. And these options are high-speed trains. Very efficient, much more safe, and much cheaper than taking humans into the stratosphere. As to travel, air travel is the only way to get around the U.S. Airlines are making lots of money right now, but jet fuel is very expensive. Foreign competitors are popping up at low prices. There is also risk of a hike in oil prices, which could eat all the airlines' profits. Nevertheless, demand is higher than ever. The airlines are the only game in town. They have attractive values and will go higher. We have 2 airlines in our portfolio, one domestic and one international. What this means to investors is that for the near term, the airlines are the only game in town. But watch for the construction companies that get the contracts for the high-speed trains we desperately need to build between our major cities. So there you are, but we're not done yet. Check our YouTube channel for more educational videos, and subscribe and look for my next podcast, which is how our work is changing. Could it be maybe that all of us